Hello, I'm Tag.
And this is Bob.
And you're listening to Bob and Tag Talk. Before we start the show, I'd like to point out that the topics discussed on Bob and Tag Talk are for informational purposes only. So please don't take this as investment advice. We urge you to do your own research before making any investment. So today we're going to talk about the Parag Parikh fund and the Navi fund. So just to recap, last time for the last couple of episodes we talked about PGIM, and then we went a little into detail about the Mirae fund of funds. We talked specifically about Mirae Fang, top 50, AI and EV. So now we're moving on to Parag Parikh and Navi. So how about we dive right into Parag Parikh Flexi Cap fund?
So Parag Parikh funds are basically all Indian investment funds. So basically it is the fund house that chooses, it's a flexible fund. So they choose the stocks which they want to individually invest in.
Mm-hmm.
So they are not investing in other funds and so on. It's not a fund of fund, it's a direct mutual fund. And as part of their strategy, what they are doing is they are directly choosing US equities and they're investing in them.
Right.
So some of the equities they're investing are like Microsoft, Google, Amazon and Meta as of now. So there are a lot of other investments that they had previously, but as of now these are the 4 investments that they have as part of their existing Indian mutual fund, Indian stocks as well as part of their mutual fund.
Mm-hmm. And you can find all of this on any
in their
app,
scheme
whatever.
document or in their fact sheet and so on. So Parag Parikh has been really popular in the past 5 to 10 years, and they have really excellent performance in the past 10 years because of their flexible strategy, and then they have been one of the leading fund houses to start investing and start looking overseas, and they don't completely invest in overseas, so they are like approximately like 80 to 85% they are investing in Indian equities, and about 15 to 20% they have been investing in overseas equities. And primarily they have always been focused on this large technology companies like Amazon, Microsoft and Google. Something even now it's Facebook as well. So there have been a lot of challenges that they have faced and they have overcome as well. So since they started, there was not a lot of rules like how much you can invest overseas, and the rules has been continuously been changing and evolving as well. So as of now, they are not making any more overseas investments. So they are limiting they're stopping their overseas investments, and some of the investors who already are familiar with the Parag Parikh may know that they actually stopped taking more investments into their funds for a period of time. But a lot of people spoke to the fund houses and requested them to continue investing in those funds, because they said we could continue investing their Indian strategy as well. Not necessarily it has to be US based investments. So they actually restarted their investments, accepting investments into this Flexi Cap fund. Now they don't make more investments onto US because of the government regulations. So as and when the government regulations change, they will keep updating their strategy and keep investing more into US or other international equities.
And I think that's why it's very important to keep looking at either the fact sheets or keep looking at their holdings to see what has changed.
At least or keep getting updates from the Parag Parikh, the fund house itself. They have been very communicative in Twitter and even emails and so on. Like what is their strategy? When will they restart investing in US equities once they have clarity on the regulatory details?
Now I also have another question. Since this is a Flexi Cap fund and not a fund of funds like you mentioned, is there something related to expense ratio or other such stuff that we should be aware of?
Ideally, expense ratio will be, fund of funds expense ratio will always be higher, because generally fund of funds have international currency implications. But this Flexi Cap fund generally is like all fund houses have their Flexi Cap funds, and then Parag Parikh is just one of them, and their expense ratio is not very low, but reasonably fair compared to the investments and strategies that they use.
Okay, got it. Okay, so that was a little bit about the Parag Parikh Flexi Cap. So moving on to Navi Nasdaq 100 fund of fund.
So Navi Nasdaq 100 is actually a passive fund. So it's a fund of fund, and but the expense ratio is really low. So Navi is one of the fund houses that wanted to actually give some products which are completely passive. Passive in the sense you don't have any difficult strategy. You just have top 100 stocks and you invest in the top 100 stocks.
Oh.
They also have a lot of passive Nifty related products, and they have international passive funds also.
But now, so what exactly do you mean by passive? If this is passive, then what is active?
So active generally means that the fund manager will choose which stocks to invest in.
Okay.
But passive means you just look at the index, you pick the top 50, top 100 or top 500 and invest in those based on the market cap.
Okay.
You don't need to make any individual stock selections.
Okay, got it.
And as and when the passive funds, basically you just need to track it closely. There will be a minor tracking error. So because it's all computerized these days, so it will be as close to the index as possible.
Okay.
And what Navi Nasdaq does is they actually invest in the international Invesco Nasdaq 100 ETF.
Okay.
So you can Invesco is a really popular ETF, and you cannot actually invest directly from India, but yeah, you can open any kind of a brokerage account in US and you can directly invest in that as well. But Navi is one product which actually makes the passive investing on US index funds much easier.
Oh, okay.
And that is their actual USP.
Makes sense.
And Navi also has other kind of index funds which they are also tracking. There is a total stock market fund of fund, and this actually total stock market is like more than 5,000 company index.
Okay.
So it's actually the Vanguard total stock market ETF.
Okay.
So it will contain all the 5,000 companies in US, which is included in the Vanguard total stock market.
Oh, okay.
So there is nothing, no specific strategy. You are just making sure. Say Nasdaq 100 is purely technical, non-financial stocks, technological non-financial stocks. So generally you will have mostly like all software companies in there, and then we will have some consumer discretionary, some oil companies as well, but you will not have financial companies. All the financial companies will come in the S&P 500.
Okay, got it.
So this is one purely Nasdaq, and then if we see the latest Nasdaq, it has really done well in the past 2 years. And we also discussed in our previous podcast that why we actually go for US or international investments is because their performance has been much better. Even in all the global scenarios that we have, technology companies are still performing better. And we already discussed about the layoffs and other things that we spoke of. They are trying to really improve their balance sheets, and they have a lot of cash in hand. So Nasdaq 100 has been really doing really well. And if you see the latest technological news, like all the technology companies are focusing on AI, EV vehicles, and semiconductor companies. All those are part of the Nasdaq 100. So you don't have to worry about individually picking and tracking the companies, are they doing well and so on. And when it comes to the total US stock market, it is complete. So it will have all the US companies. So you'll have all the financial companies, you'll have a complete all the available in the stock market. So that is the kind of advantage that we get, and it's totally US based. So you are specifically choosing the country based stock market and stuff. The only advantage is that all the US companies are global companies, and they derive the revenues from Europe, Australia, Asia, and all the other Japan and other regions as well. So it is the diversification is really high.
Okay, got it. So that's been a lot about international fund of funds. We talked about different funds that you can invest in, and we also talked about why it is very important and how you can invest in such international funds. So there's one particular thing to notice. If there are any investment limits to foreign stuff, so let me know if there are investment limits.
So let's say, for example, if you want to open a brokerage account and you want to invest from India, so you have a overseas limit. So RBI will actually change or govern this particular area. So you cannot deposit more than, let's say, $250,000 from India, and then you can do any transactions more than that for an individual person.
Okay.
And even mutual fund houses have a limit like $7 billion.
Okay.
They cannot, if you want to directly invest in some kind of companies' direct stocks, they cannot do that. That is why it is much more better for us to invest in passive or fund of funds, mutual funds which they invest in internationally. So there are no limits for that. So for example, say Navi Nasdaq 100, you can invest how much ever you want. It is only a personal limit, 250,000 USD. It doesn't matter. There's no other limits available. The mutual fund can invest, will never stop taking investments for these particular schemes. And the same goes for other fund of fund houses from Mirae Asset or even Edelweiss and Kotak. You can go to any of the other fund houses, look for fund of funds or any kind of international equity funds, and just make sure you go through all their fact sheets and understand what the holdings they have. And you can also do your own analysis and choose the best one that is preferable.
Yeah, and if you're looking for more fund of funds to check out, just go to whatever investment app you use, go to the search bar, click on and type out what international fund of funds, something like that.
Yeah, the category is fund of funds.
Yeah, international fund of funds, and I can guarantee you'll find a variety of things that you can choose from.
And there are a lot of fund houses that are actually investing in China as well, like offshore China and offshore Asia, basically any other emerging markets in Asia, like Indonesia, Malaysia, and then some Japanese related international investment schemes are also there. And then other things, there is something specific sector called REITs, real estate basically funds, where is focused on properties and real estates or commercial real estate and so on. So there are some things, but there again the risks are completely different. Individual stocks, you have full transparency, you have full transparent information. REITs are a little bit difficult to really get the details of. So better to always go with a fund of fund or a trusted mutual fund house will do the due diligence for you.
And yeah, whatever we've spoken about so far is just a gist of what you can do, how you can invest internationally. There is so many other sources that you can discover, and so many other emerging technologies that you can put your hands into. So we'd always recommend you check out the fact sheets, you do your own research analysis, and see what interests you and where you want to diversify.
Which sector, or if you want to invest only in specific sectors, or you want to invest only specific geographic regions like Europe, and you can always go and research and find exactly what these fund houses are investing in.
Yeah. So with that, it is an end to season 3 with international investing. We would request that you guys, check out more such funds if you're interested in that, and we will be back with Witter time in the next maybe few weeks or a few months. So we'll see you guys, and that's it for today. Hey, thanks for listening to Bob and Tag Talk. Please consider following us on our Instagram and Facebook pages. We put out weekly summaries of the topics discussed on the podcast. And if you found this episode informative, please like, share, and subscribe.